Investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX and the FTSE like we usually do. Our guest today will be Stan Harley. Tomorrow, our guest will be Tim Boss, Financial Cycles Weekly. Next week, we'll have Norm Winsky on Monday, Cy Monley on Tuesday, and I believe Adrian Togaray on Wednesday. So we've got a nice group of people coming in, and hopefully I'll have Paula Douglas in on the next Friday. Now let's move on to just a couple of charts that were sent to us by our good friend Jim Bartolioni. And what he's watching for, he's looking at the ETF for the, what do they call that darn thing? It's the IWM. We'll get it up here. And what he's showing you here, there's so many people that are short this. You can see here, this is the TZ8. It's the monthly log. You can see the largest monthly volume they've ever had. So there's a lot of people that are, heavily long the market. So let's just look at one of the other charts that he was kind enough to send us. And Jim is he's been a student of mine for well over 22 years. He's one of the four Top Gun pilots that I had. I started out with John and then Bart, and then Rocky, and then Jeff. So I had all four of them, and three of them are still trading. John is with the NSA. He's in a very high-level position, so he doesn't have time to do it. But if you look here, this is the IWM, the ETF for the Russell. You'll notice that you're looking at a head and shoulders pattern right here. This is a perfect head and shoulders pattern, folks. You'll notice that the right shoulder is lower than the left shoulder. It's got everything you could possibly ask for, but it may or may not work, but it is lined up to be a potential head and shoulders pattern. So he wanted me to forward this on to you to let you folks decide what you wanted to do with it. And of course, we've made new highs in the S&P. We've not made new highs yet in the NASDAQ, but we're very, very close. It's not very far away in the NASDAQ. As a matter of fact, if we take just a moment to look at the NASDAQ here, if you'll give me 1 second, I will get it up and we will take a look at it. And where is it? It's right here. You'll see here today we made the ABCD pattern. You'll be able to see it right here up at that 13,700 and change. We had the head and shoulders pattern back on the 15th. It came down, ended up to be a Gartley down on the 25th of March. And then from there, we've completed the ABCD. Now, if you look at the number of days up in the AB leg, and you look at the number of days up in the CD leg, you'll never guess what they are, folks. They are equal. And we've been talking about that for well into 4 days now. And if you take a look at that, you'll be able to see here's the S&P where we are. You'll notice those little cycles on the bottom are just showing from low to high, low to high. That comes in today. This is the 10th day up. And you'll notice here that there's a possibility of reaching 4,107, which would be the 1.618 expansion. Currently, we're at 4082, taking out the previous day's high. So these are the symmetry of some of the stuff that we're looking at here today, and we're going to find out how these things move over the next few days, because we're going to have some more increased volatility as we look at more and more of these markets. Now, if you remember, Jim also gave us a trade to look for on a longer term basis, and that is this natural gas. You'll see he's looking for a price to come down to around the 220 level. We're currently around 250. 220 is not hard to reach in this level, but you'd see if you got to that point, you'd have a big ABCD pattern setting spot on and a 61% retracement. So that's something that you should really, I'm watching it very, very closely. Let's put it that way, because he does a lot of work on his charts, and he certainly deserves the attention. So we're watching that for a potential long-term trade natural gas at around 220. That's about $30 from where it is right now, which $30 sounds like a lot, but in natural gas, it actually isn't, because it can jump around, very, very closely. Another question that someone's asked about is the British pound trade. I wanted to get this up here. I have some psychological things I wanted to talk about. Someone brought a really good question to us. You notice this is the British pound. We've been down as low as 137.20. We hit the 78% level. We're now trading still lower, but bounced off the bottom a little bit. Folks, all I did with that was take a profit. That's all I was looking to do. That's nothing else, neither here nor there. Now, moving on to the question of the day, and that is, where in the heck is silver going to go, and where in the heck is the gold going to go? Well, folks, here's what silver has done so far today, and then I'll do the gold. And trust me, I am a frustrated bull because I sold out. Now, you'll see here with the silver, today's high in the silver at 25.60. 66 was the high, I believe, and the number came in at 61. That was a 61% retracement of the high that we made on the 15th of March. And we've been up 5 straight days. Okay, and that's also a 382 off of the high of February 1st. So this is you can see we're in a downtrending market here in silver. There's no question about it. Now, if we go above 25.80, that will invalidate this, and you're looking at something a whole lot different. But the one that's interesting to me is the gold market. But look at this, folks. And I had several people say, why am I complaining all the time about the gold? Because we made $140 of it. We've made 75 on the downside and 65 on the upside, and I'm complaining. But look, what's happened to gold here since March the 8th? We have a perfect ABCD pattern, folks. It's 10 days up in the run, and it's 7 days up in the run, 6 days up in the run right now. So that completes an ABCD there at 1759. The high today was 1759.10. And that doesn't mean it can't go a lot higher, but that is a completed ABCD. And this is our first really completed ABCD in a bear market. So if you go back and look at back in January when we were up around 1950, you can see the 3 drive to a top pattern that was there. And now we've dropped, $300 and some an ounce. And now we're having the first ABCD since March the 8th. That's almost a month. Well, the 8th it was a month ago. So it's hard to be a bull up here on gold and silver. That doesn't mean they can't go a lot higher, but I'm waiting to see what the pullback is going to be because these markets certainly look a lot different. Silver doesn't look anywhere near as bullish as the possibility is in the gold market. But right now, that ABCD in the gold means a great deal. That is my 2 cents worth, and I will stick with it. I am waiting. I do not buy breakouts very well, so I have to be extremely careful with those. We've already talked about that S&P. I wanted to go over that again with you, and also give me one other thing to look at here. Did the British pound? Did I do the Apple? I think I did Apple. I'm pretty sure I did. Yeah, Apple. Here, we get up here. The Apple got to the number we were looking at was right around a 28. I believe that was a 27.68. I think we hit 28 and change. I don't know where Apple's trading today, but I doubt if it's going to get much above the ABCD, which is at 129.73. So someone tell me what the Apple is on the high today. 129.73 is what I'm looking at. 877-92.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we had a question from Jeff. He emailed me last night, and he asked, how do I handle the mental part of this business? Well, Jeff, I'll tell you, it wasn't easy, but it took many, many years to get moving towards it. I started out by reading, really good books like Napoleon Hill's Think and Go Rich. Then I met Anthony Robbins back in 1984, and I got involved with his personal power and neurolinguistic programming. I've been really big with anchoring. That's part of Anthony Robbins stuff, is you mentally anchor something. And when Mark Douglas was working with me here writing his book Trading in the Zone, he would go over the things of all the traders that would come in and being interviewed by him, and we would listen to what he had to say. And one of the things that they all just about agreed on is that they have to be aware of what their really big problem is in order to do anything about it, whether you're overactive, trading too much, pushing your stops too close, whatever it happens to do. As soon as you can find out what that problem is, you can go a way of doing it. But one of the most important things that I found after looking at all the stuff that Mark worked on, he had over 10,000 accounts at Merrill Lynch and that he analyzed for Merrill Lynch to find out why they were losing. And the main reason why they were losing was they were over trading, putting their stops too close. And then there were the people that didn't put a stop in, and they were quickly put to sleep, as they say in the trade. But that's the main thing, is you've got to be able to function on what level you're trading at, like if you're watching a 15-minute or a 30-minute. But, Jeff, I will tell you this. When you have periods when you're doing really well, it's going to be followed by a period where you don't do very well, because this is all about cycles. So what you have, when you have one of those periods, you have to scale back. You trade less. You plan your trades maybe a little more carefully, and that'll get you to the promised land. I believe in these patterns so much that it doesn't bother me anymore. I mean, it really doesn't. I just shake it off. That doesn't mean it doesn't bother me the next day, because I think about it for maybe one day and then I shake it off. But it does bother me, but I shake it off just as quickly as I can, because I know it's just as after you've had 3 losses in a row, you're that much closer to your 3 wins in a row. The thing you have to do is to follow the plan that you're in. So if you're going to risk $300, you risk $300. Don't lose, $3,000 on a trade. But that's the problem that people have, is they don't focus on what their real problem is. Most people are just you've got the 4 fears, of course. We've talked about those so many times: fear of missing out, fear of leaving money on the table, all that stuff, the 4 main fears. But if you'll just focus on what you're supposed to do right and do it every day, you're going to be just fine. It's no different than in sporting events. If you get into the wrong frame of mind, you're going to be looking at a situation where you won't be able to act because you're frozen, because you've had 3 losses in a row. You didn't do what you were supposed to do. You kept chasing a market. You didn't put your stops in. Then when you did put your stop in, it was too close. That's because you're not following your plan. And as soon as you get that plan lined up, and it's sitting there in front of you in the morning, take a little turtle, and like I do, and have the little turtle sitting there and say, okay, be patient and wait for everything to line up, and that's when you do it. And then when you're wrong, you get out of it and wait for the next turtle. Folks, I have honestly more than 400 turtles here at the house. Of all the students I've had over the years, they would come in and they would see all the turtles, so they would end up giving me one, and I give one back. But I have over 400 turtles that people have given me, because I use those as anchoring mechanisms. That's what I learned when I did some work with Anthony Robbins. So I think it's important to remember that. Well, that's why I try to have Adrian on. I'm going to have Paula Douglas, Mark's wife, on next week too, and she can talk about how you have to fight the underlying process of not getting involved with doing something wrong, because the first mistake teaches you, folks. The second mistake is the one that gets you. So it's nothing wrong to make the first mistake, but correct yourself and do the second mistake. That's mainly the main reason, usually, between a professional and a neophyte trader, is the professional knows that he doesn't want to make that second mistake. The first mistake is he put the bad trade on because it didn't work what he thought it was going to do, but the second mistake is he didn't get out of it, which he will do, whereas the neophyte trader will give all kinds of ideas. Oh, maybe I put my stop too far away, too close, whatever. But the professionals say, nope, this isn't right. I'm going to the next, wait for the next bus to come in. So that's the main thing. The only way you can do that is practice mental stuff. And that Napoleon Hill book, if you've never read that book, it's one of the greatest of all time. Think and Grow Rich. It was written in the 1930s, I believe. And I was fortunate enough to meet Napoleon Hill and W. Clement Stone when I was in college in Indiana. But anyway, that's what I would do. The personal power book. I have it on tape with I think there's 12 tapes of Tony Robbins. I listen to those as I take my walk or ride an exercise bike. But anyway, that's what I look at. And then I do in the car. I always have the tape disc of Napoleon Hill, Think and Grow Rich, because I love his voice, and it brings back so doggone many memories that I had, through my trading years. Mr. Z's asked a question about the crude oil. I think crude oil is in a trading range between 60 and 58 right now. Yes, it was Combined Insurance, Chicago, Illinois. We went up there and we had lunch with he and Napoleon Hill, and he had his suspenders and his spats shoes and stuff. He was really a well-dressed dude. That ended up being the Prudential building in Chicago later on, but it was a big deal. Anyway, very nice people, and it was really something. I was W. Clement Stone. Yeah, that's who it was. Yeah, he and they were buddies. They did business together, and but they sure brought a lot of success to a lot of people with that book. It really did do a great deal of help for people. So that's the main thing. Z's asking a question about whether I think the crude oil is in a getting ready for another move up. I don't know. It's got to get above 60.50 Z to get it moving to the upside. I think we're going to be in a zone here for another day or two between 60 on the upside and 58 on the downside. We're trading around 59.60 right now. We just completed a small ABCD on the 15-minute chart, so there should be some resistance where we just hit at around that 59.70 in that, but that's just a shorter term view of what we're watching here today. Main things to look at today, folks, is the stock market, because we're 10 days up in these things, and that's going to be looking at what's going on. Z has just posted some stuff from the U.S. Department of Agriculture showing, the drought situation's getting worse, and we're seeing some pretty good moves in these grains. I mean, they were down 10, then up 10, so they're having some really good swings here in the soybean market. We're trading May now at 14.14. They got down as 14.04 this morning, right before the opening, and immediately rallied 22 cents and has held most of that gain today. So that's another one that looks real interesting. So a lot of things happening. Volatility is increasing just about everywhere. So you really have to rethink if you're not using stops. And some people can do it, and I respect that, because they have the ability to say, all right, I'm a smart boy. I know when I'm wrong. And you got to know when to call uncle. And some people that can't do that, that's what that stop is for, is to take you out of the market. And that gives you the freedom to look at the next trade, because that's the one that'll, get going. No matter how many trades in a row you're going to lose, you're going to be that much closer to a string of winners if you do what you're supposed to be doing. And ABCD is such a simple way of looking at it. It's easy. We're going to have Stan Harley stock market letter on next, folks. Stay tuned.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley on the line. Stan, how are you doing today?
Good afternoon, Larry. Doing just awesome.
I can imagine anybody that's looking for 75,000 on the Dow's got to be feeling good today. Hey, I'm sorry to be facetious. Hey, I posted the chart here of the Dow, and we're trading at like 33,429. You're looking for much, much higher prices. You want to tell the folks what you're still looking for here? Because I know you've been bullish for a very long time, and especially since November. So why don't you take the mic and tell us what you're looking at, my friend?
I am, Larry. I'm looking at the Dow right here, the chart you have on the screen. The stock market is in a pretty strong rally here. In particular, I look at what I call the Big Five, the benchmark indices. For me, those are the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ comp, and the New York comp. And to a lesser extent, I also look at the Russell, which I heard you talking about earlier. And all five of those are looking mighty fine with essentially no divergences. Now, of course, the Russell and the NAS. The NAS topped out in Feb, and the Russell topped out, I believe, in January. They just got a little bit ahead of themselves. Market time, they're about center range right now. But I expect very, very shortly here you're going to see both the NAS comp and the Russell back in new high ground. The indices in a bull market tend to have a lead lag effect. They led on the way up. They got way ahead of themselves, so they're just kind of chopping sideways now, waiting for the Dow and the S&P to play catch up. But I see that happening now. There's the NASDAQ on the screen. Similar pattern to the Dow, not quite at new high territory yet, but I suspect it will. But here's something I watch very closely. When the market picks up steam on the upside, in my experience, you'll see the NASDAQ composite leading the charge. And today, for example, you've got the NASDAQ up strongly, and the Dow is basically just a little bit above the zero line. So what does that tell me? Well, the NAS is packing on ahead of steam, and very, very shortly you're going to see the NAS comp in record high territory. Could potentially be in the next one or two trading sessions. Wouldn't surprise me at all. But it's a bull market with essentially no divergences, none. Yeah. Advanced decline line in record high ground. So what is there not to like about this bull market?
That's absolutely for sure. Now, on March 8th, you said we were within a day or two of the exact low there. It had a tremendous move off there. Do we have any key dates coming up here in April or May that deserve your attention?
I think so, and I show this on the next chart, Larry. This third chart that we brought today is a chart of the S&P 500. And before I get into the question of the date, I just want to point out the trading cycle pattern. You and I have talked about this on air in the past. I found, and I've looked at decades of data, but the dominant cycle on the daily charts for the stock market is 40 trading days. And although it's rare to find a trading cycle, and I'm talking now low to low, it's exactly 40 trading days. If one will look at a large enough sample size and compute either the mean or the mode or the regression constant, you'll find that the nominal trading cycle count is right at 40 trading days. For example, on this chart on the screen, from the March 23rd low of last year into the March 4th bottom of just a month ago, add up those cycles, 37, 31, 61, 26, 61, 23, add them up, divide by 6, and you get 40.0 for the average.
Wow, that's very good.
And that has just, I found that pattern back, more than 30 years ago. I saw that the average seemed to fluctuate either side of 40 trading days. It continues to do that today. It'll continue to do that long after every one of us listening to this broadcast is gone as well. It's just one of those funky things. What am I looking at? Well, there's what I call a dominant weekly cycle, which averages about 34 weeks, which happens to be a Fibonacci number. And within the context of that 34-week cycle, that's about 8 months, bottom to bottom. We tend to see, on average, 40 trading cycles. Or, I'm sorry, 4 separate trading cycles. And over the course of the last year, I've annotated 1, 2, 3, 4 from the March bottom of last year into the October bottom. Then we get a new primary cycle low, and then the cycle count resumes. 1, 2, 3, 4. We are in the third trading cycle right now, and by my analysis, there should be 4. The last primary cycle peaked out in the third trading cycle on September the 2nd, and I expect the current primary cycle will also top out in the third trading cycle, which by my analysis should crest out right around April 28th, plus or minus a fudge either side of that date. But I'll be watching the tail end of this month, Larry, for a peak not only in the third trading cycle, which we are now in, but I think it will also coincide with a crest in the dominant 34-week cycle as well. And then we'll start stair-stepping our way lower, probably bottoming in late June.
Well, I would like to tell you that you've just won a major prize here at TFNN because of your comment here about the end of April, the 28th. Guess what? You've been assigned a spot on the 28th of April to be on our show one more time. That happens to be a Wednesday, so we will make sure that we see you on Wednesday, the 28th of April. Because, by golly, every time you've been on the show, you've been so doggone right that people just keep asking for you. And that's one of the one advantages that you have is when you've been right, the people do respect it. And you've done a great deal to help people along this bull market. We really do appreciate it.
Well, you're too kind. Thank you. I'm not always right, but but thank you, Larry.
The most important thing that I have learned by watching you over these years is how you change from being bearish to bullish. Way back in, I believe it was September or October is when you really turned. You were bearish at that time, and then you turned bullish, and then you became very bullish in November. And that has been the thing to do. And and it's not easy to do, but you did it. And I think that's important. And the people here at TFNN, because I see the comments that people post, is that, he did the right thing. And it's not easy to do, to reverse from one to the other. So I think it's important people realize that.
Good point, Larry. I think you and I as analysts have to have a well thought out theory about where prices are likely to go, and it has to be quantifiable, not just shoot from the hip. Quantifiable, that's an imperative, I believe. Sure. But at the same time, one needs to recognize, that didn't work out. Doesn't mean your analysis is flawed. It's just if we use cycles, we use indicators, they are prone to some variances, and that's just part of the process. And so one has to be quick to recognize that and change course. I'm reminded of the words of W.D. Gann. He wrote, "The man that refuses to change his mind will soon have no change to mind."
That's a good one. I love that one. That's for sure. Hey, Stan, thanks for joining us, my friend. We're going to have you on the 28th of April, so would you mark it on your calendar, please?
I will indeed. Thank you.
And we really do appreciate your work. Stan Harley, folks, the Harley Stock Market Letter. Check it out, folks. It's really a great letter. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, Ruby's asked us to take a look at the dollar, U.S. dollar. I posted it, and then right behind it, I posted the euro versus the U.S. dollar. The key was yesterday, folks, we hit the exact 382 in the euro. It immediately broke 70 pips, and then this morning it came back in roaring above the 382. That's a sign that dollar is weakening, and the euro is starting to increase. Now, we're up 8 days in a row in the euro, so it's due to be corrected here, supposedly. Maybe not. It could go 10, 15 days. I don't know. But the fact that we broke above that coveted 382 level at 119, and we're trading at just 20 pips or so above it right now. But that, to me, from a Fibonacci relationship basis, is very, very important because of the fact that we hit it and came back really strong yesterday, down about 60 pips, and then this morning it's just done nothing but, go straight up. So that's another one that we're, watching very, very closely. This could be related to what's going in our bond market. I'm sure it is because, we're going to be spending a lot of money, and it's going to be paid for with funny money, which basically is what the bonds are going to be doing. What I don't understand is why somebody buys a bond that's only yielding 2%. It just doesn't make any sense to me, but, a lot of things don't. So one thing at a time. So we'll pay close attention to these markets. It's not about how much money you make, folks. It's about how much money you don't lose, and you've got to be able to focus on that to really get yourself going. Since Mr. Z was asking about the crude oil, I'll bring this up here to show you. Crude's been in a really nice trading range here for the last several days. I wanted to draw the really nice Gartley that was here yesterday right at the 78% level, and you'll be able to see it real easily that we're in this really tight trading range here now between 61 on the upside, 57.60 on the downside. With we've been at the 61% retracement now yesterday, and then 1, 2, 3, 4 times today. That's at 59.85. We're trading at 59.43 right now. So in order for this market to get moving, it's got to get above $60 an ounce to start to move to see if it can go up to test that 62.80 level that was so important the other day. That happened to be the 382 of the big move in crude oil, where we made that big 3 drive to a top pattern, and then from then we've been down. You can be able to see how much it's broken here. And I love these 3 drive patterns because the 3 drive pattern, you see, you have to have that symmetry that's there. In other words, from your high to your high to your high, that happened to be 35 4-hour bars there, almost exactly within 1 bar. And that happened on a Sunday night. And then, boom, we break down. We rally up to the 382 at 62.40. And then we come down and we tested 57, 57.5, 57.60 3 times now. So you can see there is a downward bias in the crude oil, but it still has a potential here to be in a trading range between 57.60 and above 62.40. Now, as an advocate here, should we get below 57, folks? Because this is where you got to pay close attention, because when these things fail, they can really go a long way. So let's just look just to see what would happen here if we fail at 57. This is where you've got to say, something's wrong. So if you're long crude oil and it starts getting below 57, there's trouble in River City. You'll be looking at another, but about a 17% drop down to $51 a barrel. So those are just important things to remind yourself that, you've got to remind yourself that, you could be in a situation where you're looking at a market that just literally does not want to go up. And remember, it didn't have any trouble going up from 52 up to 68 into some of the worst news that ever could happen. And now we're having some good news and the market's selling off. So those are a couple of the things that you want to remind ourselves. Now, we also had a question about the wheat market. And if you'll give me a second here, I will get the wheat up and we will chat about it for just a second here, because I trade wheat quite a bit and I need to get the right. Where are you, Mr. Wheat? Oh, shut the front door and raise your hand. Did I lose it here? No, I didn't lose it. There it is right here. Just get it up here and we'll see where we are. We've had that bottom form and we're starting a little bit of a rally today. Let's get it up here. You'll be able to see it here. We went down to the 786. Let me redraw this because I thought it was going to go to the 618, and surprise, surprise, it went to the 786, and we're still having a pretty nice little rally here in wheat, mainly because the weather is starting to get dry again in some of these places. And folks, we don't have any leeway at all on these things. So you got to be really alert to be buying dips. We had a beautiful dip today in soybeans down at 14.04, and it immediately rallied 22 cents. And that shows you how quickly these markets and how nervous they are. But we're now on the 6th day of a run on the upside here. We're approaching the 382 retracement right here at the 631 level. And that's going to be an interesting spot here because that should be a little bit of resistance here in the wheat. But believe me, I think the easy thing to do is to watch for retracement, to try to buy a pullback somewhere around 610, 605. And I think that would offer some pretty good value. So it hit the exact 78% level on that day where we had the report back on the 31st, and immediately rallied 35 cents. Then it backed off 28 cents, and now it's taking it all back again. So it's telling you there's a lot of buying coming in on some of these things. And wheat is the weaker of the three. The soybeans are the second strongest, corn being the strongest, and then wheat being the least strong. But they're still bullish, and nothing's really changed. We have a potential here, the fact that we're rallying in this, and if we don't get much higher than the 382 here in the wheat at 632, that'll be a sign that you don't have to be bullish anymore. But right now, these things have all systems go. I mean, they've done everything they could possibly have. They've had good moves. The most amazing part is that how the beans could even go down at all, considering the report was so bullish. But there were parts of the report that were hard to interpret, that some people said, well, they're not nearly as bullish as you might think. So that's a couple things that we try to remember. But when you're a technician, you have to find out, what is the price level that you have to say this thing's not going up anymore, and that's when you have to decide what to do. You don't have to worry about reading what you're listening to with the fake news or whatever it is. And believe me, there's fake news in all of these things. You just look at that bar chart, and if it tells you the prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the bottom line. And if you can do that, then you got a big advantage over, just about anybody else. As a matter of fact, I'm watching wheat right now here. with the AI program, and I'll bring it up to you just to show you where we are. We're sitting right at the 382 retracement here with an hour or so to go, and it says the market should start selling off in the wheat. Now, whether it will or not, I don't know. It's a probability, but at this level, you only have to risk 3 cents. So you can be a farmer for $150 here and don't have to see whether you're right or wrong. That's the real key of looking at it. But those are just some of the things. And I think that would answer the question that Jeff asked earlier: is how do we do this? And it's all about it's about risk control. I know the problem is that you get into a trade and then you don't manage it right, you don't get out when you should, and it's got a bigger loss and a bigger loss, and that's when the problem lies. We'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. By the way, I remind us that we have Tim Boss as our guest tomorrow. And on Monday, we have Norm Wensky. On Tuesday, we're going to have Cy Monley from the Farm Bureau. And then on Wednesday, I believe we're going to have Adrian Togaray, which says it's going to be. And then I think that's it. And then I have another one on Friday, but I haven't booked it quite yet. All right, let's take a look here. People ask me a question here. Which do I take is the most important to me, the pattern itself or the Fibonacci numbers? And folks, I like to see them both together. Of course, you don't always get that. I posted the chart of the NASDAQ showing you the 78% level. Now, that's sitting right there. That was a chart from yesterday. It actually backed off a little bit, but I'm going to be willing to sell right at that fib number. I usually risk about 20 points in the NASDAQ. That one happened to break and then came back to break even. And then I posted the second chart, which is the chart for today, where we're completing the ABCD pattern. And not only that, but we're completing it just like in the S&P. We're completing the AB leg in price and the AB leg in time. So this should be today or tomorrow should be a high in the market, and we should have a correction. Will it be the high? I don't know, don't care. I'm interested how much am I going to have to risk to see what the correction is going to be. And these corrections, just in the NASDAQ, the correction from 13,280 to 12,500, that's 1,300 points. That's a lot of money, folks. That's $26,000 in the NASDAQ. So you've got to be really prepared to, get into an area where you don't have to risk very much to see if you can gather that type of a move. But right now at 13,760, we're right in this ballpark where it should be. And the old high was 13,920. But you take the numbers come first. Mathematics precedes geometry. That was from Mr. Albert Einstein himself. But I like to see them both together. We don't always get that. That's it. Folks, live every day in an attitude of gratitude, and may God bless, the words of Anthony Robbins. And also, if you be so kind to your neighbors, they need help. We'll be right back tomorrow.